us Marco Roque, the CEO of Cassiar Gold, to talk about the gold market, which has been on fire lately. Record highs last week. What's your take on why that's happening?
Well, I mean, to start with, I guess we've just been living, I guess, in the last 12 to 24 months, and seen unprecedented buying by central banks. They've been the main driver, mainly BRICS central banks. You also had sovereign wealth funds buying, you had Asian retail, Chinese, Indian retail buying gold. And now I think gold is in everyone's mouth as, Trump and Elon looking to audit, if the, Fed reserves are actually at Fort Knox. So it's I think we're like seeing, questions about debts, credit risk. So, I think I'm a big believer in gold, and I think it's about time people are actually paying attention.
So you think that's the macro environment, the debt, the government debt. There has been a lot of talk about Fort Knox, what's happening there. Do you think that's also leading to some buying?
Potentially, I think so. I think, honestly, what's going on in terms of the deliveries in the COMEX here, and talks of potential default in London, as people seem to be scrambling for golds. Some people are speculating that the gold is not in Fort Knox, that actually the buyer of all this physical gold coming to the U.S. is actually the federal government or the Federal Reserve or the Treasury or the U.S. government. I don't know, but it's certainly bringing a lot of attention into gold, and it's also interesting that at the same time, kind of mainstream or media attention is turning to gold. You also see kind of the crypto markets rolling over a little bit. So I don't know if it's connected or not, but I see some patterns.
Yeah, no, there's been a lot of really interesting market moves just in general this year. So tell me about your company. Where do you operate? What do you do exactly? Yeah,
so Cassiar Gold, we are a Canadian gold explorer. It's a company led by a team of mining executives that has discovered, built, operated mines not only in Canada, but all over the world. We have a past producing district. It's 145,000 acres, 100% owned. It has 5 past producing mines. We have a resource of 1.4 million ounces inferred at surface, over a gram per ton. We're growing. Our objective is to get this project to 5 million ounces, which, at today's gold price would be, $15 billion of contained metal value in revenue. So in addition to that, we have all the infrastructure because it's a past producing. We have permits, we have social license, and, a very undervalued and very exciting company.
Yeah. Are you publicly traded?
Yes, we're traded on the TSX.V. We're trading here in the U.S. on the OTCQX and also in Germany in Frankfurt.
Yeah. Now, so what do you see for the future of gold? Because it has been very interesting this year.
Well, I think gold is going to continue to march higher. I think, maybe in the last 15 years, people have been kind of, some people commenting as a pet rock, a barbaric relic. But the truth is, gold has, 4,000-year track record as being humanity's, financial reserve assets. And I don't think that's going to change. I think there's space for a lot of other assets and for a lot of innovation, but gold will never lose its place as the basis of the financial system. So I think people will continue to accumulate gold to protect themselves against counterparty risk and inflation and geopolitical risk. The same for central banks, the same for sovereign wealth funds. So I think we might see a golden renaissance right now.
Yeah, interesting. And then tell me about your company. How are you strategically pivoting with the gold prices where they are right now?
Well, I mean, we actually not pivoting. Our goal is really to continue to grow like our resource base. Find more gold, expand our reserves, and of course, with the excitement coming in the gold space, in the gold price, and eventually into the equities, which hasn't really percolated yet. So that's an opportunity, by the way. I think as that excitement comes into the equities, I think we'll be able to accelerate the growth that we have, and because we have a massive district with a lot of room to grow. So we want to continue to build ounces and increase value for our shareholders.
Interesting. You mentioned the equities. So the stocks really haven't followed gold prices. Is that typically a lag, and do you think they'll catch up at some point?
Typically, there's not a lag, and yes, I think it will catch up. And I think what's interesting is actually, coming back to the beginning of the conversation, most of the demand for the physical metal in the past 12 to 24 months is, again, BRICS central banks, sovereign wealth funds, and Asian retail. That's not typically historically the gold market and the gold bull markets were led by Western investors, and now Western investors are playing catch up, and I think that's why we have a lag coming into the equities, and I think that was also going to be a natural process of people coming into the metal that eventually want to jump over the fence and take a little bit more risk and go to the big producers, and then after down the chain to the smaller, medium producers and the up and coming new companies as well.
Marco, thank you so much. So interesting to hear about gold and its play in macroeconomics and geopolitics. So thank you so much.
Thanks for having me.
Yep.